Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. We made it to the end of another week. And one of my favorite things, Mark, that is typical Mark Yusko is the end of the year countdown. We're now in the point of counting the year down in weeks. And what are we, seven weeks to go?
Crazy. It's been a fast year.
Very fast.
We proved that we don't always coordinate our fit. So we got a little difference going here. You're very fall up in the north. I got my Notre Dame blue on, playing Big Navy tomorrow. Quick, because I have a topic I want to talk about. But I got Bitcoin orange on, but I have the whale sock game on again. Different version of the whale, the blue whale. Because the whales are taking a lot of grief this week.
Oh, yes.
Crypto Twitter and actually the whole Bitcoin community has turned into a bunch of freaking Gretas. How dare you? How dare you sell any Bitcoin? I'm like, guys, you know what? People who own Bitcoin don't have to just hold it forever. And the thing that we need to be focused on, in my view, is it takes a lot more fiat to buy a Bitcoin today than it used to.
Here.
So most of these whales that people talk about, they bought their Bitcoins when they were fractions of a penny, single pennies, single dollars, sub $100. And it didn't take very much fiat to become a whale. If they want to sell some because they want some running money or they want to buy a house or whatever, someone could buy islands, that's their business. And we need to be working collectively as a community, getting people to adopt Bitcoin as a store of value and ultimately as a means of payment. And so, but it takes more capital. And, at the end of the day, fair value is kind of where we are. We're actually still a little above fair value based on, Tim Peterson's work. We should have Tim on. Tim would be a fun guest to have on. He would do it for sure. I spent a lot of time with him last Friday after you and I recorded. And, his point was, look, we're in a distributive pattern.
Yeah.
And what that means is there, more sellers that are for the first time selling. Now, it's not as bad. And I didn't bring the chart, what could have been the chart of the week.
Yeah.
But there was a great chart that someone did that said, really the vast majority, like 70% of the sales in the last month, since the peak on October 6th, have been coins owned less than 2 years. So it's not really, but the thing is, those are reacting to the other 30% that are moving for the first time, and people are freaking out and panicking. And I get it, but if the only net new participants in our market are arbitrageurs like Millennium, right, that buys IBIT and then shorts BTC against it for a market neutral trade and make the roll down yield, that's not gonna push prices up unless, we get more people to buy. So anyway, I don't want to, actually, I'm going to go on record, breaking news, so to speak. I do unfortunately think we're in crypto winter.
That's why we got our sweaters out for those that are on audio only.
Yeah. I mean, look, I know no one's going to like this, and I'm going to get lots of crap on Twitter about it, but we talked about this in January, that the 4-year cycle was likely to repeat. Humans were going to human.
Yeah.
We would move above fair value, and I actually, look, I thought it would go further above. I thought we'd hit 150 or 170.
Yeah, I thought 150 for sure, but we were a little short. Maybe Mark, unpacking kind of why people are kind of reacting this way is we saw Bitcoin drop below 100K, its lowest price since June, and we topped out at 126, so we were not all the way to levels that we may have anticipated. But it wasn't just BTC. I know it is the tide that lifts all boats, but basically all the other altcoins came down as well, and so we started seeing what unfortunately was different since 2018, Mark. We didn't have an October. We had an all-time high, but we were in the red for the first time since 2018.
Yeah.
And, we're starting to see a lot more of these macro forces impact that. And Mark, maybe that's just a sign of where we are in the S-curve. And maybe you can opine on this, because when you're trading like a lot of the whales at like sub $1 or sub $10 or sub $100, what is the macro going to do to that, right? If you're now, at this level where you have
again, that those assets are, in some ways lottery tickets. And I don't want to diminish anyone who did the work and believed in the tech, but none of them, I shouldn't say none of them, very few of them, when they bought those coins, thought that we'd have $100,000 Bitcoins or even $10,000 Bitcoins. There's tons of stories of people who bought, for a fraction of a penny, and when it got to $10, they're like, "Oh my God, this is awesome! I'm out." And when the price fell to 2 from 10, people are like, "See, I told you, it's over." So we've heard the same thing over and over. But part of the problem is, it's kind of like why people talk about this K-shaped economy. The wealthy are doing great, regardless of what's happening. Their real estate prices are going up, their stock portfolios are going up because we're devaluing the currency. And that's why Bitcoin prices are up, gold prices are up. But the average person on the bottom end of the K is struggling, right? Defaulting on mortgages, defaulting on car loans, defaulting on credit card payments. There's a macro world that is not really wonderful right now. And everyone says, no, but GDP is really high. Like, yeah, because we allow for accelerated depreciation and we create this illusion of GDP by building out all these data centers that are probably going to end up dark, just like dark fiber, right? We've seen this movie before. Everybody was going to lay fiber all over the world in the telecommunications boom in the late 90s, and prices went crazy, and then WorldCom happened. And the scarier one to me is the nonsense off balance sheet financing that's going on, and hiding debt to finance these AI projects. And now we got the freaking CFO of OpenAI saying, "Oh, we need a government guarantee." I mean, even and Altman trying to walk that back. But actually, go back to your first question, the S-curve. Look, we're in the adoption phase of the S-curve, but that's the point. We need more adopters, right? We need more people to take some of their fiat, convert it into Bitcoins, use it as a savings tool, use it as a, payments mechanism, use a Strike app or something. But that has slowed. That's why the rate of growth of the fair value has actually slowed down. The number of transactions is off a little bit, the size of the transactions. So the fundamentals, they're not bad. They're not like crashing, but they're not in bull market zone, which means number go up, hopium, which is what is all over crypto Twitter. It just didn't going to work. And look, I hope, so there it is, the word. And by the way, hope is a 4-letter word in the investment business. It is not an investment strategy. But I do hope that I'm wrong-ish and that, everybody goes away in a couple of weeks for Thanksgiving. And
we always see a boom after Thanksgiving, don't we, Mark? Because kids come back from college, they talk to their parents, there's rebalancing, and maybe there's those Christmas wish lists that, need to be paid. But to your earlier point, you had a good one about, folks needing to kind of cash out the Bitcoin for something else. And I think this is a point that's lost, Mark. And I don't spend enough time thinking about this, where somebody said, I cashed out my Bitcoin, went to $10. And a lot of these people didn't stay on the sidelines. It came back in with some of the gains. And so unfortunately though, Mark, that did not happen in the 24-hour crash in October, where we saw 19 billion in perp futures get liquidated. A lot of those people stayed on the sidelines. So the hopium maybe, it's a very powerful drug. But if you kind of think about that money that's outside of the market, potentially kind of being infused, maybe around Turkey Day, you could see some sort of a stabilization.
I think we're in unfortunately a distributive pattern. And that means that people who have gains are selling to noobs. And that's just the way every asset goes. We're actually going to see it in AI stocks. There's going to be massive distribution, and they've rolled over hard. Oh my gosh, we've seen it in the, I can't even call them new meme stocks, because they pretend that there's actually a business, like, the nuclear stocks and the quantum computing stocks. I mean, Rigetti just failed DARPA level B. So there's like DARPA 1, where you can get a grant from the government, and people call that revenue. Like it's an educational grant, research grant. And we like it. We have an investment where DARPA has given them, a lot of money, and we count it as revenue, but we don't expect a multiple on that, because it's not guaranteed and it's not repeatable. But anyway, they applied for a new grant and they got rejected. So now
major insult.
The stock has rolled over hard, and the true believers, and this is the thing, what do they believe in, right? They believe in hype, like the Willow story. Like Google releases this Willow story. Every time Google stock goes down now in the last 6 months, they just release this Willow story again.
Exactly.
It beats some benchmark. I'm like, well, but what are the benchmarks? The benchmarks are factor this number. Like, okay, factoring a prime number. Yeah, you can do that faster than a CPU. Okay, great. But how am I going to use a prime factoring computer? It's not going to help me if it can't get math right. Right? If it can't do 2 + 2 = 4 100% of the time, not 99% of the time or 98% of the time. Long story. I think, companies like that literally will go to zero, and that type of environment isn't good for Bitcoin short term, because Bitcoin is a savings tool. Right? Most people view it as kind of like gold or cash, or it's this thing over here that you don't want to touch. So you got this other stuff, the speculative stuff. Oh, I'm gonna go levered long, Oklo stock, this modular nuclear thing that will never happen. But you lever up on that and you get a margin call. Well, the stock's down 30%. You can't sell that to make the margin call, because you have hopium that it's going to go back. So what do? You sell your gold, you sell your bonds, you sell your Bitcoin. And so that in these liquidations, NVIDIA rolled over. Now, look, I've been wrong about NVIDIA for a very long time. Take full responsibility for just not seeing the logic that a company could go to 30 times revenue. I didn't see it. But in the last few days, it's rolled over hard. And there were people that bought these 5 times levered, ETFs. Those things unwind super fast when it happens. So I am a little nervous, and I did hear initially one last thing. And I do love the fact that we have Xavier Super Edition today, like the XL version of Usco. I'm feeling a little XL today. But look, I think the I totally derailed my thought. You go and I'll come back to it.
Yeah, no, I think picking up on a couple of things that you mentioned, just one with the idea with quantum, we'd be remiss, Mark, if we didn't give a shout out to our portfolio company, Pascal, that broke ground in Illinois, making that one of their HQs for their whole operation. And now this is pretty interesting because that'll bring 50 high tech jobs into the region in Illinois. And, those are, the top notch, right? And so they are supported by over 21 billion in state initiatives. They'll have 6,000 square feet. And, Illinois itself is kind of establishing itself with the universities, with sort of government subsidies. They put 500 million towards climate initiatives. And so when you mentioned about the DARPA thing, I kind of chuckled because Pascal is going to be sweetmates with DARPA's Quantum Proving Ground and IBM. So there's going to be like this whole suite of occupants there. And, that's going to be one of those things where we will see, the kind of irony here, Mark, and I know you'll love this story. And the twist is that all of that headquarters that is now there was previously steel workers, 20,000 steel workers in huge plants. And it really kind of signals the shift in the economy as we kind of go towards more high tech. And one thing that you had kind of mentioned, we didn't get to it last week, was NVIDIA kind of checking over to the 5 trillion mark, and what that represents as a share of US GDP, depending on the day and who's counting, anywhere between 10, 15%, something insane, right?
I think it peaked at 16%. And the highest before that single company was 4%, Cisco, back in 2000.
Right.
And look, NVIDIA is a great company and their chips are great, but they're not going to be, here's a bold statement that people will say, oh, you're going to regret this. No. NVIDIA chips won't be the only thing 10 years from now, 20 years from now, right? Just like Intel chips, which were the only thing in 2000, are no longer the only thing. And, Intel's been pumping up again. I think someone else announced, we're going to use, Elon, we're going to use Intel. Like, really? What are you going to use? What are you going to use? The mythical chip that doesn't exist, that's built in a factory in Arizona that doesn't exist. Okay. I tell you, this is the one thing that drives me probably the most crazy of anything. The movement of market cap on announcements of future things that are super unlikely to happen. Remember when SoftBank committed $500 billion at the inauguration?
Yeah.
How much has SoftBank put in? What has SoftBank stock done since then?
Yeah. Okay. Nosedive.
And no one goes back and say, hey, where's the money? And so Sam has committed $1.4 trillion, which he doesn't have. I mean, this is a company that incinerates about $20 billion a year. So he doesn't have any cash. How? And this was so funny. He was doing the interview, right? And someone said, well, how are you going to pay for it? Oh, these short sellers are horrible. I'm like, you're a private company, dude. There are no short sellers.
Yeah.
And then you had, Alex from Palantir go off on the short sellers. And maybe I'm conflating those two stories. Maybe it was Alex who was talking about the short sellers, and Sam just said, right, we'll figure it out. I can't remember. But
well, and Mark, you probably would love this marriage here. Tell me, sometimes when you look at the Hollywood romance, you can tell that there's no chance of things working out, right? Dennis Rodman, Carmen Electra, less than 30 days. You pick the various people that Britney Spears has been married to, far less than that. So here's one maybe that is destined for either high success or ruin. I think it's going to be somewhere in the extremes. OpenAI and SoftBank have formed a JV, Mark, a 50-50 joint venture with Japan by the name of Crystal Intelligence. And so this is an idea to sort of bring more tech from offshore into Japan and localize and sell OpenAI enterprise software. Mark, where do you kind of lean on this based on your queue up?
They're going to run out of words, right? Yeah. I mean, they're going to need a better AI tool to come up with stupid words to create these mythical JVs that are never going to happen. I'm sorry. Look, liars lie, right? Liars lie. And all that said, I want to go back to, I did remember what I was going to say.
Great.
So down here, North Carolina, Andrea Zigethy used to work with us. She was our events person, and then she's created this great business that brings together the brightest minds in allocator land and great managers, and does this 2-day conference twice a year. And they had it down here at the Waduke over in Durham. And Andrew Ross Sorkin came and talked about his book.
Excellent.
And the book 1929, right? It took him 8 years of research. I mean, he did super hardcore, reading diaries that he couldn't even read. So he had to get optical scanners to try to help him, translating Sanskrit and things like that. Long story short, he wrote this. It's actually a pretty good book. It's getting good reviews. People love it. It's more like a page turn. It's like a story.
Right.
I learned that, the head of GM back then was kind of the Elon Musk of the day, inventing all kinds of stuff. Even though Elon doesn't invent anything, he just operates things.
He's an early employee.
The dude just got himself $1 trillion pay package, but so he is good at what he does, but he doesn't invent stuff. But the point is, what if it's not a coincidence that a book about the crash that happened after the roaring 20s, that was fueled by debt and speculation of, and there's this passage, and someone just quoted it this morning, that when the old guard, right, the people who have been on Wall Street, this was back then, it was Charles Schwab and Merrill. I can't remember Charles. I think it was Charles Merrill. We're like, this is ridiculous. I'm losing to these kids who know nothing, and they're speculating and they're winning. And when you could have written that this week, right? You could have written that passage this week.
Yeah.
And when that happens, usually bad things happen. And anyone who tries to say bad things could happen is instantly a pariah, right?
Yeah.
Dismissed as a bear and a bad person and un-American, all the same things that are happening. That, we're at the most overvalued inequities ever in history. Worse than global financial crisis, worse than 2000, worse than 1929.
Wow.
In terms of pure valuation. Never been more overvalued on every metric. Twice, actually 2.2 times global or US GDP market cap, which is normally about 70%. So we're 3 times more than average. Never been here. And it doesn't have to end tomorrow. I don't know when it'll end, but
will Sanskrit tell us the date? Is there a Sanskrit buried somewhere, Mark, that we can kind of, blow off some of the...
No, there is. It's not Sanskrit, but there is this piece of paper from a guy, Sam Branham. He was a commodity farmer back in the 1800s.
Right.
And he studied moon, sun, and star positions and the impact on crops and commodity markets. And he was turned from a farmer into a famous trader. And he wrote this book. And in it is this one page. And it's basically a choppy line like this. And it lays out with precision bull markets, bear markets, turning points with date labels.
Wow.
It nailed 1929. It nailed 1968. It nailed 1973. It nailed 2000. It nailed 2008. And he wrote it in 1850 something. And so it says 2026 is the bad year. So
that's a great one. That's a great deep cut. I'd say, Mark, that when I hear about that, my mind instantly goes to Back to the Future Part 2 and the sports almanac. It is stolen from Marty McFly. So that's one of those things. But Mark, what do you say about one of the competitors. Maybe one of the reasons that OpenAI is in the biggest trouble to date is because more people sort of caught up in the LLM market, which is some ways commoditized. So
Man.
Anthropic, they projected 70 billion in revenue and 17 billion in cash flow within 3 years in 2028, right? So they're already outpacing ChatGPT or OpenAI in revenues. They're 3.8 billion this year. And they're aiming for 9 billion ARR, and 26 billion next year. So they're already kind of fueling this growth. They've got a lot of favorability with Google.
So no, your point is really, really important, X, in that there was a chart the other day that said this has never actually happened in history, where a company went from kind of 80% market share to 30% market share this quickly. And ChatGPT, right, was first, and it had huge adoption. Anthropic started later and was distant second, like it was 80 to 5.
Yeah.
Anthropic now, and this is enterprise, okay, so people actually paying for big number of seats. Anthropic now has surged to like 40, and ChatGPT is 35. And then there are a couple other competitors that take the rest.
Yeah.
That had never happened before, where you had this unassailable lead that was assailed. And so I think, to your point, this new announcement by Kimi is that, yeah, y'all aren't even good. Like, we can do it way better and, more importantly, with less energy. This is why, to me, all this nonsense about, oh, we have to build so many more nuclear power plants and we have to, no, we don't. All we have to do is use software to utilize the hardware better. This idea that, oh, the way to solve a problem is just do more GPUs. Of course, the GPU salesman is going to say, yes, that's the best solution. But a software engineer can say, well, that's dumb. I can write a code that does a constant loop at, in the background off chip. And so, again, I'm not technical enough to know exactly what they're doing, but they're doing it.
Yeah.
And that's why I said GPUs are not the be all end all. They're good right now, but TPUs are probably going to replace them. And then VPUs and LPUs and 3PUs and all the other PUs that are coming.
Yeah.
And maybe, we have this portfolio company that we just had a discussion with, that has this new approach to combining photonics and silicon. And maybe that's the future.
Yeah.
And so, I mean, that's the cool part of what we get to do.
Yeah.
We get to live on the edge or live in the future. And,
but it seems like also, Mark, from the financial perspective, there are kind of two different ways to operate a business. And it's kind of like the two models coming head to head in terms of how you can kind of the blitz scale that Reid Hoffman always talks about from LinkedIn, growing as big as possible, not worrying about things like margin. That's OpenAI. And then kind of more of the post-pandemic, demonstrate revenues, demonstrate conservative growth, and focus a little bit more on margin. I mean, that's Anthropic right now, right? So basically, they're already demonstrating much tighter margins. And if you look at OpenAI, they're projecting 100 billion in revenue by 27, which is a big number. But, what do their margins look like? They're pretty much toast.
No, over that same period, they'll lose $115 billion.
Right.
Which they don't have. And so they're going to have to raise from somebody. And, here's the thing. SoftBank keeps committing money, again, that they don't have. The Saudis, they have it, right? I mean, they have a lot of money. And they, oil comes out of the ground. Yeah, I love the story I've told many times. This friend of mine did a movie for these sheikhs. And he was with the guy and he was asking him some question about how much he paid for something. He was like, I don't know. And the answer was $2 million. And my friend was just like, wow, that seems like a lot of money to pay for a license plate. And he says, 1 day's pay. And he was like a minor sheikh. He wasn't like the top dog. So he was one of the 6,000 princes and $2 million a day. So when you literally can print money not out of thin air, but out of the ground. Yeah, you can fund a lot of, but at some point, I would think even people with unlimited capital would want a return on said capital.
Yeah,
I don't think they just want to light it on fire. I don't think.
No, you would think that there's some sort of sustainability for generational wealth that would happen probably, down the road. Although there is a stat, Mark, that I'm sure you're familiar with in that, what is it, 90% of family firms are bankrupt by the third generation. So,
shirt sleeves to shirt sleeves, baby. And look, we do live in an era, past 100 years or so of lighting stuff on fire. Like that's almost like the broken window fallacy, right? You break the window and it doesn't count against GDP, and then you fix the window and that counts for GDP. Or the hurricane hits, that doesn't count against GDP, but if you rebuild, that counts for GDP. I mean, that seems like an accounting glitch. And lighting money on fire to build AI data centers that don't produce positive cash flow, I just think is not a sustainable business model.
Yeah. And then probably the last quick AI story we'll get to, Mark, before the chart of the week, which you'll like this one. We're kind of going back to some of the earlier points you mentioned on just the long-term holders. So a little bit of an Easter egg for those that want to stay tuned to the end, is that, if you're trying to kind of challenge some of the startups, the new kids on the block, and you're an incumbent, you kind of have two strategies, right? You can either buy the new kid on the block, or you can team up with your enemy and become an even bigger foe. And that's exactly what Apple and Google are aiming to do. They've inked a $1 billion annual deal, Apple with Google, to power the next generation Siri. Anybody who was a Siri regular user, we're talking to you because it's probably a relatively small audience. I think folks don't use Siri nearly as much as their market lead would suggest. Mark, they were the first voice assistant in mass, and they never really kind of latched on to the lead that they had. So to your point about first mover fallacy, that's Siri in a nutshell. They could have really owned the voice market. So hopefully Google will help them be a little bit more intelligent. Do you think that this is a nothing burger, or do you think that they can actually come on to something big here and challenge Anthropic and some of the others? Although, Apple's working.
I mean, it's beyond a nothing burger, because to your point, they had the innovation.
Yeah.
And look, I think it is interesting that, I thumb type all my requests into my phone.
Mm-hmm.
I hate it because I'm bad at it, because it's not tactile like my BlackBerry was. So I hate it, but I do it. My son never types with his thumbs. He only talks to his phone. That's a generational thing. And he's 14. So that's a generational thing, but it's also an interface thing, right?
Right.
I grew up with, fingers on a keyboard, and then it was fingers on your phone, thumbs on your phone. And then now it's this, and you got the ads on TV, talk to your computer, the AI assistant. I'm like, okay, again, this is not new. We had Clippy, right? 25 years ago, 30 years ago, we had Clippy. Talking to your computer has been around a long time, and it's better now. And and look, turning plain text into code to do something, good, awesome. And we're investing in a company that's doing just that. And to be able to say, hey, computer, because I have Siri. I never use Siri. Hey, Siri, you there? Oh, look. Okay. Yeah.
Says I'm listening. Now.
But it did go on. The funny thing is, it always comes on when I say, because I say seriously a lot. I guess my kids tell me I use it too much. I say seriously, and Siri will come on. But I never use it. I go to Google or ChatGPT. I don't use Siri. So can Google make Siri better? I guess they can, but why? I would rather talk to the search bar that's going to do, because why do I want to talk to an assistant who then is going to talk to a search bar, who's then going to, and like even right now, ChatGPT was supposed to be this language model that based on training would iterate an answer.
Yeah.
Well, now it says, oh, wait, I'm searching the internet. Like, I didn't ask you to search the internet. I can search the internet. I want you based on this super training that you supposedly did. And so if all of this stuff is just an interface, and again, this is where it gets sinister. If this is an interface which is going to be controlled by the owners of AI, like we saw this with the chat browser, the OpenAI browser, you ask it a question, oh, I'm sorry, we can't give you any information about Adolf Hitler. Like, why? Like, really? And then the really dystopian part is, and it says, yes, I can't give you any information on that topic. And oh, by the way, I've notified the proper authorities and talk to your social credit score. And so, your car won't start tomorrow. I mean, that is a dystopian nightmare that I am worried about.
Right. But at the time, Mark, this is Apple really waving the white flag at their own in-house AI capabilities, right? So they went all in on the hardware side, putting it in our phones, and then obviously creating their own software to optimize it. But just, overnight, Google and their AI has 8 times larger in-house parameters. So it's 1.2 trillion parameter model. And they evaluated also Anthropic, but Google and Apple have been off and on frenemies for a long time. We knew that they powered the Apple search bar, that has been used with Google search for a while. So, I think this is what this to me signals, Mark, if you kind of look at the tech cycles, once enemies start working together, like when AOL and Yahoo started working together, it was because, Google and others were kind of coming to the horizon, Facebook. And when I see Apple and Google partnering, it tells me that we are at a different part of the S-curve. We're now at the point of
100%. We're at that maturity point.
Yeah.
And ultimately, we're at this very critical juncture where we have this wonderful thing, this open internet, right? All the world's information at your fingertips. And the thing I complain about most lately is in the old days, the reason Google was so good is it didn't actually search the internet, right? Because if you had to wait for it to search the internet for what you wanted, it would take a long time and it wouldn't. What they did is they indexed, they created these beautiful folders. And so as soon as you start asking the question, it knows where to send you to get, but it's getting you the real information. Well, now it's turned into this thing where, well, I might send you to the real information, but before that, you gotta surf through these paid ads. So I'm gonna send you there first. So it used to be 2 at the top and I could ignore those. Now it's like 2 pages before you get to something that's actual information. Well, that goes from an open internet to a closed internet, but it's still pay to play. And I don't feel like it's sinister, like propaganda manipulation. It's just whoever pays me the most, I'll give you their information. This new thing that I don't like is in a closed internet, like all I can see, because I don't like him either, is Bill Gates talking to David Letterman in 1994, where he says, no, you don't want the internet. You want the Microsoft intranet.
Oh, God.
Like hell to the no.
No thanks.
That is not what we want.
No thanks.
We do not want your idea of what's good for us. We don't want that. We want all the information, and then we want to make the decision. I don't want ChatGPT telling me, oh, this is proper information, but you can't access this. And now, how about this? Now it won't give health advice, it won't give legal advice, and it won't give financial advice.
Oof.
Why? I mean, is that because the legal lobby is going to pay you some money to do the stuff that you don't have any money for? I don't understand that.
Yeah.
Anyway.
Well, in this part of the podcast that we refer to as the chart of the week, we examine what words can only scratch the surface on what a picture is worth 1,000 words. A chart is worth a lot more than that. So, Mark, want to share the screen and remind the listeners, as always, to tune into the video feed. Check us out if we've been deep faked, or the Bitcoin game stock reveal. And this, Mark, chart of the week, makes a call back to the first part of our chat today, where we're speaking about what is the activity on the long-term Bitcoin holders, and maybe what that might be able to infer from future actions. So what we're seeing here is a little bit of a rainbow chart. See, I'm getting in touch with my inner flower child, Mark. I like rainbow here.
Love it.
What it was showing for those that are on audio only is a supply breakdown of age circulations. This is a great thing about Bitcoin, Mark. If you have fiat, you can't really do these kinds of analysis. Maybe you can figure out like the old bills in circulation, but with Bitcoin, you can see exactly who's moving and when, because it's all minted on chain. So we can figure out exactly what some of the early Bitcoin holders are doing, and what this is showing is a graphical representation of that. And I want to hit you, Mark, with a crazy stat that you probably have reacted to already. But if you add the last 2 years, 2024 and 2025, that accounts for nearly half of all 5-year-old plus Bitcoin ever spent, which totals over $100 billion, distributed from long-term OG holders to newer investors. And that's exactly what we were talking about, Mark, because at some point, you can't eat your Bitcoin, just like you can't eat your $100 bills. You need to convert
100%. And look, here's the thing, because I got in trouble with the Bitcoin maxis one time, because I hypothesized one time on a podcast that, if I were doing this at the beginning, if I were Satoshi, which I'm not, obviously, if I were, I actually might have done it differently at the beginning. I might have done an airdrop to everybody, right? And, oh no, that's ridiculous. It's all about proof of work. I'm like, yeah, but that meant if you happen to be lucky enough to hear about it or know about it, and you had a computer that you turned on, but a lot of people would have done the same thing had they known about it.
Mm-hmm.
So all that said, I relented, and I said, no, it is better the way it is. That you got to contribute energy to own this asset. That's what it's all about, converting energy into value. So I relented, but this shows the problem.
Yeah,
is at some point the distribution must happen, and if I'm selling an asset that cost me $1 for $100,000, okay, the person who's buying it has to come up with $100,000, like real fiat dollars, which means there are a lot of people that have $1, lots and lots. There are very much fewer people that have $100,000.
Yeah.
Okay. That's just math. And so that distribution is real. And ultimately, this is the crazy part, ultimately, the bulk of those old coins have to get sold. So the Greta response, how dare you, right, can't be. We need all those coins to transfer to the masses, and not whole coins, but fractions of coins. Like I still think we should go to Satoshis, right? Because there's plenty of Satoshis for everybody. There's not enough Bitcoin for everybody. And, anyway, but that's where we are. And it is so inevitable and so positive if more people come into the community. Right now, we're a very closed community, trading coins between ourselves and a few hedge funds. And we're shocked, I tell you, that the price won't just go up. You need more participation for the price to go up.
You need a real market. And to that point, and sorry for the chart crime, those that are following, the numbers are super small here, but what we're trying to show is basically the activity in the last 6 months. And Mark, this might explain, why we've gone from 126,000 down to 100,000, because this year alone, I love this term, Mark, 4.65 million BTC have been revived, right? And so as if they were never there, they're minted and they are there, even if they're not necessarily in circulation. And as we know, there's 21 million of this stuff. If you count what's been lost, it's probably something in the high teens. So, this is a significant percentage over the last short amount of time. And if you kind of break it down further, you're looking at, 1.9 of that 4.6 was held over 2 years. 800 plus thousand is 1 to 2 years. 1.9 is from 6 to 12 months. So, you're still, within kind of, let's call it the new OG Bitcoiners.
Yeah,
right?
yeah. But here's the bad news, good news.
Yeah.
Okay. The bad news, and this is true for all markets, and I talk about this a lot in terms of the meme coins and the silly concept of market cap, right? You take 100 tokens traded between two people for $10, and then you apply that price. It's like XRP. You apply that price to the billions and billions of tokens. That's ridiculous, because if the original holders sold any of those, like Dogecoin is the worst. If Elon ever sold a Doge, the price probably plummets close to zero. So the bad news is that we're in a market where we can go from 126 to 100 on very little incremental flow. That's not a very robust market, actually.
Mm-hmm.
The good news is we had those 5 million coins revived. That now they're not the Satoshi coins, because the Satoshi coins, when people are like, "Oh my God, we'd all freak out."
Right?
I don't know, maybe, but we had 5 million. 5 million is a lot of coins. That's more than the Satoshi coins. 5 million coins that suddenly started moving, and we didn't collapse to zero.
Bingo. That is a huge.
That is the good news, right? If this happened with Doge, it'd be over. If this happened with XRP, it'd be over. But it didn't, and so the bad news is we're still a manipulated market, shall we say? There's still not enough new participants. We need more. But the good news is it's not, the market didn't break. And that's great.
And Mark, since you mentioned it, I love riling you up about XRP, because I just think that the comments that we get are hysterical. So, we say that they're dead, and yet, Mark, they just got a huge number in capital injection.
Not XRP. Ripple
Foundation, correct?
Not XRP.
Technically,
not
that
XRP.
Is true. That is true.
Look, I don't understand why anyone would invest in Ripple, but
this was Citadel. This was Pantera.
No, these are real. These are real investors who are Citadel Securities. The people that run Citadel Securities are way smarter than me. I got super lucky years and years ago, because we were early investors with Ken, not in his dorm room at Harvard, but not that long after, when I was at Notre Dame. And then we did it in the UNC, and then all through Morgan Creek. So it's coming up on 30 years we've been investing with Ken. And we had a chance a number of years ago to invest in Citadel Securities when they spun out. And we put a little bit in, but super, super smart. So I'm just wrong, but that is an XRP. And maybe the answer is because Ripple still owns a whole bunch of XRP, you can value it based on the market cap. But I'm happy because we're invested with Pantera.
Yeah.
And Pantera was an early investor in Ripple at a low valuation. So 400 million. I mean, that's great.
Yeah. I mean, to your point, Mark, you hit all the notes. They have repurchased more than 25% of their outstanding shares, Ripple that is, through XRP. And I think, while we didn't talk about it on this show, we've talked about it a lot about, what the impact of stable coins are. And, XRP and Ripple, I mean, that was their reason to exist in the beginning, was a way to kind of send things borderless and with reducing friction. But I'm glad, Mark, that we were able to kind of highlight a little bit of what's going on, more AI today, more on the sense of the sky is not falling on Bitcoin, despite the price, coming down to the 100K mark. It went below 100K. I was a little nervous about that.
Yeah, look, and it probably will. It probably will go below 100K for a meaningful amount of time. I said, if winter has started, and I guess I'm just going to admit that it has, we're going to have 12 months of yuck. And that yuck doesn't mean we're not going down 84% this time. We're not going down 74% this time. I think we're likely peak to trough 50, maybe, probably less. So we've already done, 20. So, could we see 70s?
Yeah, the halving price.
Yeah, I mean, we could. I'm not saying we will, but we could. I just think, look, winter, it sucks. There's no way around it. Then we get to spring again, and spring is fine, but it's just kind of choppy and wet and muddy, and it's the summer that you really start to see things turn. And so, the next halving is 28. So, we're a couple of years away from, being super excited again. That doesn't mean that world's going to end, and doesn't mean it's going to be bad, but we need to continue to do what we're doing.
Correct.
Build infrastructure to onboard more users, more wallets, more, people who believe that this is the best store of value, that it is truly digital gold. We need central banks to adopt it. We need, nation states to build reserves. But most importantly, we just need to be patient and not worry about the price, because price is a liar.
Correct.
What matters is the value of the network, and the value of the network just keeps accreting up.
Well said, Mark. I will likely be off next week on the global travels. Wish me luck as I navigate TSA and everything that has been canceled. Hopefully it won't be too impacted, but this is my favorite part of the week, as we often say, being able to talk to you and to share that with our listeners. So thank you for that. And always remind our listeners to rate, review, subscribe, and as always, to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.